I'm here with Jarod Dawson, Portfolio Manager at PM Capital. Jarod, thanks for joining us at the Inside Network's Income and Defensive Asset Symposium.
Pleasure, mate. Thank you very much for having me.
Now, one of the key conversations of this event is achieving steady income streams for retirees. What advice do you have for advisors that are seeking to achieve this for their clients?
Look, it's a really good question, and advisors have obviously got a multitude of choice when it comes to where they generate their incomes from. I think as an absolute return investor, we've talked a lot in the symposium about having a flexible, looking for funds that have a flexible mandate, because what that actually allows you to do is put capital where you think it should go. And in that regard, if you've got managers that have the flexibility to kind of answer that question for you and then allocate to where they think they can generate the best incomes, whether it be this part of the cycle or that part of the cycle, then it's kind of answering that question for them a little bit. So, definitely an emphasis on finding a manager that, can allocate capital where they think the best returns and the best incomes can be generated with some flexibility around their mandate, as opposed to, well, your mandate's so restrained, you have to put it here and you have to put it there. And they, whether it be a benchmark or some sort of arbitrary investment mandate, once you start tying your capital up that way, you tend not to get the best outcomes. So from an investment perspective, you want that flexibility to say, okay, well, I think that's the best place to put capital over there, so that's where I'm going to put it, as opposed to this is where I have to put it.
Volatility is something that a lot of investors are concerned about. What are your thoughts on securing capital stability?
Look, everyone's talking about volatility at the moment, and it's treated as a little bit of a dirty word. And the reality is, volatility is what creates the opportunities in markets. And so, interestingly, again, coming back to that idea of having a flexible mandate, if you have the ability to be substantially out of investment markets when markets get expensive, you can keep capital to the side. And, odds are that when markets are expensive, there will be some kind of retracement. And so if you're on the sidelines whilst that's happening, you protect capital. But then beyond that, you're also in a great position because you've got that extra spare capital there. You've got the ability to then go and on-invest that capital in the opportunity once markets have moved. The net result of that tends to be a lower volatility return. And so in that regard, it comes back to that idea of flexibility. But volatility is not a bad thing in markets. Volatility is what creates the opportunity. It's having the capacity to then take advantage of those opportunities that allows you to generate the returns, and most of the time it'll be done with a pretty sensible level of volatility for the end result that you're getting.
And of course, it speaks to the importance of keeping some dry powder on the sidelines as well.
Absolutely.
Do you see domestic, international, or a blend of exposures as the key to achieving resilient income?
I don't know about whether you need to focus on having a blend per se. The reality is, as investors in Australia, we all are probably, unnecessarily lean towards looking for ideas in our local markets. The reality is most investment opportunities, and when I say most, I mean almost all investment opportunities in reality, are overseas. And so you should be allocating capital and looking for investment ideas in markets where you think the best ideas exist. And in that sense, what I'm really trying to say is, you're not necessarily biased towards Australia or biased towards, the US or the UK or whatever the case might be. It's about looking for the best opportunities. So if all the best opportunities were in the US, for example, then that's where your capital should be. Having a blend, I think, if investors generally fall into these default positions of saying, well, we have a bit of this and a bit of that and a bit of this and a bit of that, then we'll be okay. If that's your starting point is, if we have a bit of everything, we'll be okay, that's not a great starting point for investing your own money and your clients' money. It really should just come down to where are the best opportunities and how much capital am I willing to put into them.
And what do you think might be the biggest market surprise as we move into the back half of 2024?
Yeah, what a great question. In terms of, I guess, the biggest market surprise, my gut feel is that, interest rates are probably somewhere about right where they are. It's interesting that the US is now
Right, in terms of inflation?
well, in terms of the absolute level of interest rates and the RBA cash rate, it's interesting that the US is really starting to price in aggressive rate cuts at this point, and Australia's in this really weird position where the RBA is kind of guiding to potentially higher rates, but the data that we're sort of seeing start to come through is sort of suggesting that rates are probably about right where they are, and indeed the bond market at the moment is actually pricing in or leaning more towards a rate cut. So there's obviously going to be some volatility at some point as all those sort of all those areas sort of untangle themselves. But it's the understanding that where rates are at the moment, whether they go up a little bit or go down a bit, it's broadly correct and broadly consistent with where interest rates have been over the last 20 years. I mean, you look at the 20 years into early 2022 before interest rates started to rise, and the average RBA cash rate was about 4%. Well, that's where we are now. We're at about 4%. And so, I think there's an unnecessarily kind of focus from some investors on the idea that, interest rates could go back to 1 or 2%. I think that's highly unlikely. And I think anyone who's sort of looking for that is going to be pretty bitterly disappointed.
I tend to agree. Jarod Dawson, thanks for joining us.
My pleasure. Thank you for having me.